All right, guys. Well, today I'm going to go over some commonly asked questions in multifamily investing. I talk to a lot of people who invest a lot or who want to invest, and I get a lot of questions about what I think about the future of multifamily investing and when's a good time to get in and what makes a good deal and a lot of things like that. So I'm just going to kind of give my immediate reaction to some questions that I've been asked and some comments that I've received, and just kind of talk through it as more of a investing philosophy kind of idea, and give you my opinion, how I think about these things, and where I think the market's headed, and things like that. I think that multifamily investing is one of the best ways to build your wealth as a normal person. Um, it's a good way to secure your dollars against rising inflation. As the government continues to overspend and print more money, it inflates the money supply, which decreases what your dollars are worth. This is why having some kind of investment is crucial, or else your money just loses value every year. So you need to have something that is protecting you from the devaluation of the dollar. Multifamily and real estate in general is a good way to do that. Um, so that's one of the reasons why I like multifamily as well. So let's just start out here with my list of questions people have asked me here. So why multifamily instead of single family rentals? Okay. Well, single family rentals are not bad. They're okay. Um, I don't necessarily like what some of the big companies are doing where they're buying up hundreds of thousands of single family rentals. I would prefer to see those being owned by people rather than a corporation. But for the normal person, single family rentals is usually where people start out because they're priced cheaply, obviously, a lot cheaper than multifamily. And so that's kind of everybody's first foray into rentals. And you do learn a lot by doing single family rentals. You learn how to deal with the renter. You learn how to do maintenance, how to collect rents, how to pressure people to pay their rent when they're not, what kind of the expenses are and when you need to pay. You get kind of a basic feel for cash flow and cash management and things like that. So it's kind of like a micro business. And so I think that there's nothing wrong with that. And a lot of people have made plenty of money in single family rentals. The reason I like multifamily more, or I would recommend if you do have single family, maybe you try to sell them, as a batch or something like that, and then 1031 it into a multifamily. Because the nice thing about multifamily is that it's all about scale. All right. And the more you can scale something, the more you can grow it in size. You just have a savings that comes along with that. You can save money on materials because you can buy in bulk. You've got, because you have four properties. Let's say you buy a fourplex instead of four single family rentals. Well, now you only have one roof instead of four roofs. Okay. You only have one sidewalk to scoop instead of four. You only have so much concrete instead of, driveways for houses. You have half as much siding to fix if it hails. You get rid of those kinds of issues. So the roof is maybe bigger than any one single family house you own, but the roofs on four single family houses are much larger and more expensive to repair or replace. So you get some of those kinds of things as well. Plus, like a multifamily, let's say a fourplex, let's say individually the units are $100,000 a piece, right? So now you get four units for 400,000, whereas buying four houses for 100,000 a piece is not probably going to happen. So you can buy more doors, more rental units with multifamily because they're priced lower per unit than single family rentals as well. Um, Also, multifamily is pretty easy to get loans for, just like single family. Um, Also, there's a big pool of buyers for multifamily properties if you want to sell. So it's a little easier. It's easier to get rid of single family rentals, but it's not that difficult to get rid of multifamily either because there's always investors looking to buy more multifamily stuff. Um, Also, you can um, there's less. Let's see, how do I want to say this? There's less risk with multifamily. So if you, let's say you buy two houses for 200,000 a piece, so you have two houses, $400,000, or you get four um, apartments, a fourplex for 100,000 a piece, so you got 400,000 and 400,000. Well, if one person moves out of your fourplex, you're still 75% full, and you're probably going to be able to still pay all the bills. If you have one person move out of your $200,000 house, then you've got a 50% vacancy rate. You're not going to be able to pay all the bills. You're going to be in a rush to get somebody in there. And if you don't, then you're going to lose money. Also, with single family rentals, um, every one of them has its own furnace, water heater, things like that. And a lot of times multifamilies will have one water heater, maybe for the whole building. Maybe they'll have electric baseboard heat, so you don't have central furnaces and airs. A lot of them will have their own in unit, but um, there's just a real benefit to it being in one location where you have all the properties, right? So if you got a fourplex rather than four houses scattered across the town or across the country or whatever. So it's nice that they're all in one location. It's also usually easier to get someone to manage multifamily than single family. And there's more money to be made in multifamily than single family. So a single family, you'd be lucky to make a couple $100 a month after all your expenses, and then you'll get the equity from the loan pay down. And then in multifamily, probably get $1,000 a month along with the equity pay down. And so I think single family rentals are fine to start out with. I think that's nothing wrong with that. And that's where a lot of people do have to start. And I think, though, you should have an eye towards multifamily and either borrowing against your single family to buy the multifamily or selling the single families to move up into multifamily. Kind of like the game of Monopoly, where you've got the five greenhouses and then you trade those in for a hotel. And so then you get more money because you have a hotel. So yeah, that's my advice on that. If you got any insight or any other questions, please put them in the comments. I read all the comments. I'd be happy to answer any questions you ask, or to do a video on something if you have something that you think would be useful or beneficial to you for a video. So let's do number 2 here. Is multifamily investing still worth it in today's market? I hear this a lot, because the prices have gone up, the interest rates are up, and, that makes it not as interesting or good of a time as it was in the past, So prices are starting to come down and sellers are getting more negotiable, and they're starting to see that we've hit the top, and the people who want to sell or have to sell are having to reduce their prices because the interest rates are still so high, and because everything went up inflated so high up until 2022, 23, that now we're starting to see stabilized prices, and we're starting to see them come back down. Also, I think because a lot of people took out these low interest loans and to buy mostly bigger complexes, but still some smaller ones as well. In 22 and 23, they took out these super low interest rate loans and they thought that the rents were going to continue to go up, but rents we've seen have plateaued and are even starting to fall. That when these people go, they maybe have had a 3-year term at a 3% interest rate, 3.5% interest rate. Well, now when they go to refinance, the property's not gonna be able to pay for their refinance because the rents haven't increased as much as they were expecting and the interest rate's much higher. And so we're gonna probably see some good deals coming on the market in '26. And if you keep your eyes open, you're gonna be able to spot some of these. You're gonna be able to find something's going on, like some of these sellers are gonna be forced to sell, and so then you wanna be the buyer who's ready and who's watching and who knows what's going on, who knows what's happening in the market to where you can jump on the deal right right away. Okay, so the multifamily investing is worth it in today's market. It's maybe a little different of a strategy than what has been in the past, but it's still worth it, and there's still a lot of money to be made. And like I say all the time, you make money when you buy it, all right? Because you're a good analyst on the property. And so you know what the value of the property is. You know, you have a good idea of conservative future for the property. And if you can exceed that in reality, then all the better. But you want to make conservative projections and you want the property still to make sense even at that. So you want to set the bar pretty high for what you're looking for. You don't want to set the bar low just because you're anxious and so obsessed with wanting to get into the market. But I think that in '26 that we probably will see some rate cuts. Um, when Powell's done, Trump's probably going to put somebody who's much more interested in cutting the rates quickly, even though maybe it doesn't make sense. You know, inflation doesn't seem to be too high, and growth seems to be doing fine. So we'll see, but I would not be surprised to see 2 or 3 rate cuts in '26. And so that probably won't affect the valuations though, because there's still going to be a lot of these people who even at rate cuts, their interest rate is still double what it was when they first took out the loan. So if you can find, unfortunately, a lot of these properties that are have this sort of adjustment that's coming up in '25, that we saw some of it in '26, we're going to see more in '27, we're going to see more, is that usually they're in undesirable areas, or they're massive um, complexes or something like that. So there's not maybe that much opportunity there, but it's just something to keep in mind that um, everybody's, we're going through this transition period with the interest rate thing, and it just took many years to get here. Um, so I would recommend, you know, being bullish and keeping your eyes out for good deals. There's always deals to be had. I had well, I'll go on to the next one. I've talked about that enough. Um, let's see. What makes a good multifamily deal versus a bad one? Well, in my opinion, a good deal, the first number one priority is that the property pays for itself 100% at a full loan. Okay, so if you're buying it for $1 million, you're getting a loan for $1 million. That's how you want to do the analysis, and you want it to be able to pay for that. Okay, you don't want it to be, well, I'm putting 20% down, so it's only an $800,000 loan, and with an $800,000 loan, it can pay for that. No, you want it to pay for the whole amount. That way, you can compare all these across all these properties to one another, and you can find out what the good deal is. Okay. Also, because the most desirable outcome would be for you to get 100% financing on the loan. You know, now, a lot of times when you start out, that's not necessarily possible. But as you learn more about how financing works and what banks look at and what they like to see, the more you can kind of play with the numbers and play the game and give the banker what he needs to see. And you can use your other assets that you've accumulated to borrow against and things like that. You can maybe do some seller financing. and things like that, to where you can get the deal without money into it. So if you can get a deal with no money out of your pocket, that's a good deal. But as far as the property itself goes, what I would love to see, what I love to see is the property can 100% pay for itself, preferably with even money left over, because you're going to have problems that happen. Big things are going to happen. You're going to have to replace windows, or you're going to have to replace flooring. And then, that's a big expense. So hopefully there would even be some cash flow left over that you could save. Um, then you also want the property to have some kind of upside potential, some kind of value add. Maybe the rents aren't as high as you think they could be with a little bit of fix up, and that's ideal. I mean, value add is there's a ton of money to be made in value add. And what it does, it also protects you, because it protects you from these market fluctuations. All right. So if you buy property for $1 million, let's say, and you have $1 million loan, and you can value add and raise the rents and get the value of the property up to 1.5 million. Okay. Now, when the market fluctuates, and let's say the market goes down to 1 million, well, you're not underwater. You're still above. Whereas if you bought it at the very top for 1.5 million, and then the market's wobbly and it goes down to 1 million, then you still have a mortgage at 1.5. If that makes sense, so it gives you kind of a cushion for market volatility, so that you won't have to default on your loans, because you could sell it at 1 million and pay off your mortgage and break even at worst case scenario. Um, so I like to see that in a deal, some kind of value add element. Um, a bad deal would be one that's a super low cap rate for something that's in a dwindling area, that maybe is the rents are the top of what they could be, so they might have nowhere to go but down, in a probably, somewhere that has a high, at this time, someplace that has a high immigrant population, because a lot of those places, the rents are falling fast because of deportations and things like that are going on. So I would kind of be real cautious in those areas. Um, their numbers from last year or this year, 2025, that they put in the offering memorandum might be overly inflated. If you're in a really heavy migrant area, um, the the rents are probably going down next year, because there's not as much demand in those areas because people are leaving. Um, so let's see what else would make for a good multifamily deal. I like to see when there's major upgrades already done, like new roof replaced in 2022, new boiler in 2022, new, those major things, new concrete, because that adds up. Be $100,000 of concrete in no time. And then where are you going to get that money? So I love to see those big upgrades. I'm not really that concerned about what the paint's like, or necessarily what the flooring's like, or a lot of inside, because that stuff is it can be cleaned up fairly easily, can be made presentable, and it doesn't cost you, like like concrete for 100 grand, and you get nothing. Like, your property looks exactly the same. The concrete's nicer, but doesn't you don't get paid more rent because you have new concrete. So, um, okay. What most beginners get wrong about multifamily investing? Well, from my experience, the thing that they've gotten wrong the most is that they don't get started soon enough. While I was out going and accumulating and buying, and I was a beginner still, I had friends who wanted to get into it as well, and who were trying and wanted to, and all they would do is talk about getting into real estate because they were too scared to actually get into it. Okay. They they like to look at it. They like to dream about it. They like to listen to Bigger Pockets. They like to listen to other podcasts. They like to talk about principles and Robert Kiyosaki and things like that, but they never bought anything. You're not a real estate investor if you're just talking about real estate investing. Okay. And you're not getting rich talking about investing in real estate. So I think that's one of the big things, because there is a sense of anxiety when you buy these kinds of properties, and when you start getting yourself into massive amounts of debt. There's a big anxiety that comes along with that. There's an anxiety of, oh my gosh, can I trust myself that this is actually a good deal, that I should actually put myself on the line for, that I should actually borrow this money for, that I got to convince a bank to give me money. Like, there's work that comes with it, and there's an anxiety and a stress that comes with it. So if you're not willing to overcome that and deal with that, then you're going to stay on the sidelines, and you're going to talk about it and dream about it, and you're going to live vicariously through the people who are doing it, rather than doing it yourself and building yourself a future. Okay, so I'd say for sure that's the number one issue that I see the most. um, in terms of buying, I think beginners are fine. Maybe you're never going to understand the market as well when you're a beginner as when you've been doing it for 10 or 10 plus years. You know, I overpaid for my first property. I could have got it cheaper. I probably could have got seller financing. I could have gotten a whole bunch of things that I didn't even know about at the time. And so because I was a beginner, I had to learn, but that's okay. It's worked out fine. Um, it didn't work out as well as it could have if I would have been more experienced. But even still, I didn't know what I was doing, but I've made a ton of money doing it. So I would say getting started, getting over your fears, um, making sure that you're buying properly, and having somebody, who maybe is experienced help you with the numbers. Um, and then just having a confidence in yourself and your ability to deal with whatever it throws at you, and this sort of self-assuredness that you can do it and that you'll just make it work. You've never done it, but you're looking forward to the challenge, and you feel confident enough in your abilities to be able to pull it off even when bad things happen. Okay, that you're going to find ways to manage your stress when you get stressed out that are not destructive to you. And so getting started is very difficult. It's very easy to think about getting started and to listen to other people's stories and listen to other people's successes, and to be like, wow, that would be so amazing if I could do this. I would be such a big, success. But, you know, and then a lot of times what'll happen is, for beginners, they'll have a bunch of naysayers in their life who will say like, "Oh my gosh, are you sure you want to do that? How are you going to pay that off? What if this happens? What if that happens? Oh geez, this is so scary. This is so frightening. Are you really sure you want to do this? How do you know? You've never even done it before. All those kinds of things." So listening to those people is another something that beginners get wrong. They listen to those people. They give them far too much say, let their words carry far too much weight, and they shouldn't, because those people have never done it before either. Because if they had, they'd be telling them to buy. That's what they would be doing. They'd be helping you buy, because they would know how great of a deal it is. Okay, so just because you're a beginner doesn't mean you have to listen to other people who are ignorant and take their advice. Okay. All right, number 6. Should you wait for interest rates to drop before investing? I don't think so. I think that if you start investing while they're high and they do drop, then good for you. You just make a bunch more money that way. But you want to invest as if the interest rates are going to stay at what they're at. right now. Okay. So you don't want to value the property that you're looking at as if interest rates will come down because we don't know. You want that to be icing on the cake. You want that to be all benefit to you if it does happen. The value of your property will go up, and then you can have a rate adjustment with the bank, and then your mortgage payment will go down, and so you get more cash flow and you'll get more appreciation. So I wouldn't wait for interest rates to come down because the price of the property moves together with the interest rate. So if the rate drops, the value of the property goes up. So you pay more for property. If the interest rates are lower, you pay less if they're higher. So there's a direct relationship between those things. So I don't think that it really matters as long as you're buying. The rates aren't going up. I think we can all agree on that. They're not going higher. Um, I think there was a very low chance of them going higher. So you can probably use the numbers we have now as a pretty accurate top. And so make sure you're just valuing the property based on current interest rates. And if it's a good deal, pays for itself, has some improvements, has opportunity for you to increase rents and improve the property with small cosmetic changes and manage it better, then doesn't matter. Interest rate doesn't matter. If as long as the investment makes sense and pays for itself. Number 7, is multifamily really passive income? Yeah, it kind of is and it kind of isn't. It's passive in the sense that you kind of get to choose if you want. You can choose to be as passive or active as you want. It's sort of like a sliding scale, from extremely active, managing it myself, doing the maintenance, mowing the lawn, doing all that kind of stuff, to extremely inactive, almost passive, to where you're just looking over income statements. You're talking to the manager about things you want to improve, or you're getting a monthly report on, okay, this is what we brought in for rent, and this is why, and this is our vacancy rate, and you're just looking at the numbers. And maybe you go to the property a couple times a year and you look at it, make sure that the manager's not turning it into a dump. Um, and then that's about as active as you would need to be. So, I mean, you could completely not be involved at all, like not look at any numbers at all ever, and never, but your investment's not going to do very well if you do it that way. If you're just relying on the manager to act like it's their property and treat it the way that you would if you were them, they're not going to, because it's not their property and they're just an employee. So they're going to want to do a good job, hopefully, but they're not going to care about maximizing the value of the property and the income of the property and all that kind of stuff, because it doesn't really pay them anymore to do that. All right, let's see what else we have here. How about what expenses do beginners always underestimate? That's a good question. Um, and it's in my opinion, it's probably always repairs. Like, there's always something breaking. There's always something going out, something that needs fixed up here, a door that gets broken, a piece of trim that falls off, a closet door that breaks, refrigerator that quits working. So there's a lot of parts and pieces in an apartment building. And so I think that it's easy to sort of hope that the expenses are low, but in reality, the repairs are probably going to be higher than what you expect. And then you're going to get into this weird position too, where you're going to be looking at a property, and let's say that the previous owner had put white trim around the bottom, but then the doors have wood trim around them, right? And you're going to get to a point where you're going to be like, I don't really like that there's two different colors of trim here. Do I replace the trim around the doors, or do I just leave it, or do I paint it, or what do I do? You probably could just leave it and not do anything, but you're going to want to spend money on things like that because they make you feel personally uncomfortable, and make you feel like, oh, my property's not that nice and people are, going to judge me for it or whatever. So I would resist that temptation as much as you can. Now if you have carpet in there that is totally nasty and stains all over it and it's been worn through and you have no choice but to replace it, that makes the decision easy. And then you replace it and you hopefully put down luxury vinyl. But when it's those on the border decisions, those are hard to say no to because they're not that expensive and they would just make it feel so much nicer. But I would I would say probably try not to do that, at least for the first couple years, maybe while you're doing it, um, so that you can build up some cash reserves first. Okay, here's one. How do apartments make money if rents stay flat? Um, well, you don't make as much money, that's for sure. Rent rarely stays flat, um, and it rarely goes down. Although recently it is nationwide going down. In many parts, it's not. It's still going up, but um, there are other ways to make money with apartments. So you're still paying down the loan, so you're still making equity in the property that way. The government's still printing money and inflating and overspending, so there's always inflation. So you're making money that way because if you have $1 million asset and let's say inflation's 3%, you make $30,000 right there. Now that's not cash you have in your pocket, but it is net worth value. It's equity that if you had to sell the property, you would get, or that you could borrow against if the bank lets you. So you've got those two ways. Another way is on taxes. So it saves you money on taxes. So if you have a property, um, generally you can depreciate it over 27 years. So I can't. Let me just do the math here real quick for you so that I can give you an accurate number. So if you going back to our example, you buy $1 million property and you depreciate that over 27 years, which is the standard. That's $37,000 a year of depreciation. And now depreciation might be a difficult concept to understand for some people because it doesn't really quite make sense. Basically, all it means is this is the amount that you can deduct from your income so you don't have to pay taxes on it. All right. So 37,000, if you made, let's say on this $1 million property, let's say you made $3,000 a month after your loan, the equity you're getting from your loan pay down. All right. Not the appreciation, that doesn't count. Okay. So just the equity you're getting from your loan pay down and just the cash flow you're getting. Okay. Just those two things. Let's say that that's $3,000 a month. So at the end of the year, you made $36,000 on this property. Well, your depreciation cancels out any income tax you would pay on that. So, not that if that was your only income for the year, you probably wouldn't be paying any tax anyway. But let's say that your income's 10%, or that your tax is 10% on that. Well, you just saved $3,700. All right. So it makes sense. So even without raising any rents or doing anything like that, you still made money on appreciation, made money on depreciation, and make money on principal, on the equity, on the debt pay down. So there's lots of different ways that this all comes together to make you more money. So it's a pretty great deal. I don't know of many other investment opportunities that have so many avenues of money making combine into one thing. Maybe if you guys have any examples, let me know. But hey, if you guys Don't forget to like and subscribe, okay, to help the channel grow and to reach more people, so that we can get more conversations going. We can get more of a community established, so that I can get more questions in like this so that I can answer more and I can help more people get into real estate because I think it's a great thing for people to do. I think it's a great lifestyle choice to be in real estate. That's one of the things a lot of people are concerned about is lifestyle. I don't want to go sit in an office for 50 years, 8 hours a day, and I don't either. That was a big fear of mine, actually. And is one of the things that really pushed me into getting into real estate is, the idea of just going and working for somebody and for a corporation every day, day in and day out, over and over and over again, just sounded like hell to me. I had jobs like that. And the idea of doing that for the rest of my life terrified me, honestly. I was like, I'm not doing that. No way. I'll figure out some way to do my own thing. Now I have freedom to go here and go there. And if I want to sit in an office for 8 hours, I can. Or I can go outside and I can go do something else. I can go for a walk in the middle of the day, or I can go out for lunch. I can go see my daughter's plays. I can go, I'm free to make my own schedule and decide my own time. And that's why I think, and generally, when people are in real estate, that's kind of how they operate, and that's one of the real lifestyle benefits of it as well. Okay, let's see if I got anything else in here. Here's an interesting question. I think, how long should you plan to hold a multifamily property? I think that's something you really need to consider when you first get in. Like, what are your goals? What does the next 5 years, 10 years, 20 years? What's your plan with this property? Is it to fix it up nice so that you can sell it, and so then you can 1031 into a bigger property? Is it so that you can pay down some debt and raise the rent so you can get a little more cash flow? What is your plan? Is it that you just want them in your town, and so they're hard to come by, so you're going to buy and you're just going to hold because until another one's come up, and you're just going to accumulate? What is your goal? What are you trying to achieve? Are you trying to achieve stability long term? Like, mine was always very long term, uh, net worth based gains, right? This was I wanted, actually, what I wanted was something that I could do for the rest of my life, even into my 90s. And real estate's the perfect fit because it's not physically grueling. It could be if I wanted it to be. Um, and so it's something that doesn't have a time. Like, if you're a contractor, well, you're kind of done by the time you're 60 because your body is shot and you've done you know, a lot of wear and tear on your body. So I didn't want to do something like that. I didn't want to only look forward to retirement and then have nothing to do afterwards and be bored. So I'm like, okay, what's something that I could continue to do forever? And this is it. I can buy an apartment complex when I'm 85 years old if I want to, you know. So it depends on how long you plan out your future and what your goals are. If your goals are cash flow based, like, I want the cash flow income to replace my um, current job, then you're probably looking for something else, and you probably, mm, you know, you're going to definitely need to do value add, and you're going to probably need to put in some time of your own to juice these properties to keep the expenses low and to fix them up and clean them up so you can juice the rents and get them as high as possible so you can start getting some cash flow. If you just want to be like a buy and hold guy who's just like, 40 years old, but then doesn't plan on retiring until he's 65, but wants to have some kind of asset, then, just buy it and keep it for 20 years and, not really think about it or whatever. So a lot of people do that too. Or something maybe they want to give to their kids, so that their kids have an asset. It really depends. In general, though, I would say generally people buy and hold multifamily. Like, people will own these things forever until their 27-year depreciation is up. And then they have to start paying taxes. And then they'll sell it and roll the money into another property so they can restart their depreciation schedule. So my plan is to hold long term. I recommend people to hold long term. So, all right. Well, I think that maybe I'll just stop there. Um, if you guys have any questions for me like that, or anything that's, you're just curious, or something you want me to clarify that you saw, just, I think my email's even in my email's in the description. You can email me, or you can get a hold of me on X, or you can just put a comment on YouTube, and I'll be happy to reply, and we can chat. So